Here's today's Money Metals Minute, brought to you by MoneyMetals.com. It's been a big week in the precious metals markets, with gold and silver surging following the Fed Reserve's decision not to raise interest rates. The positive post-Fed price action in all the precious metals is an encouraging sign for bulls who are looking for a big fall rally. Odds favor a higher market and higher precious metals in the weeks ahead. And now here's a special report from Mike Gleason of Money Metals Exchange.
It is my privilege now to be joined by our good friend David Morgan of the Morgan Report. You've written your 10 rules of investing in the sector, and I know owning the physical metal is first and foremost in your view. So before we get into discussion about mining stocks, which I'll ask you about in a moment, talk about why you recommend owning the physical bullion before you do anything else.
Well, almost anyone that's in this sector, and that can go from anybody that's like a prepper or as extreme as a survivalist, or someone that's familiar with financial markets and monetary history. Everyone understands that we're at risk at all times, and especially now we're in a situation on a global basis we've never been in before, which is that the reserve currency of the world is failing, which means you need something outside of the system. You need something that's not electronic-based. You need something that has no counterparty risk. You need something that's universally recognized. And you need something of high value that could be used anytime, anywhere, by anyone. And that, of course, is gold and or silver. And this has been the case.
Are there any products that you prefer over others? For instance, in silver, do you generally recommend coins versus bars or coins over rounds? Does it even matter, or is it just about getting the most ounces for the money, or do you want variety? Give us your thoughts there.
Yeah, I 10 rules of silver investing. I said you should strive to get the most ounces per dollar or yuan or whatever currency you have invested, which means, first of all, small units. You definitely want to start with small units. You don't want to have one 100-ounce bar and that's your silver holdings, because now you're in a kind of a fix. You've got to make one absolutely correct decision when to turn it back into fiat currency or barter with it or whatever. So you want small coins if you have rounds, but if you're particularly interested in recognizability, for example, and you want a government stamped coin, you're willing to pay a slightly higher premium, I have nothing against that. Also, the constitutional silver, or what's known in the trade as junk silver, I think that's still a good way to go. The bag market actually is fairly tight. So much has been smelted down into bars. There isn't a lot of it around, actually. But small units, rounds or recognizable coins are the way to go. I think you can start with silver if you're modest means. If you have better means than that, I think you certainly should have some gold. I think you should actually have both if you can afford it. And I also think that moderation is the key. I think, a 10% holding in physical metal is probably more than sufficient for most people.
Now, if you look at the silver spot price, it's up more than 35% since the first of the year. But if you look at the mining sector, gosh, David, we've got the Huey Gold Stock Index up nearly 100% for the year, and the GDX is up over 120% year to date, even with the big pullback in the last few weeks. So things are finally starting to look up after a rough, very few years for everyone in the sector, with many stocks down 80% or more since the 2011 peak, assuming they even stayed in business. But talk about the miners. What are you looking for here in the second half of the year after a great first half?
I'm actually looking for further gains by the end of the year. I think we've still got more work to do to the downside. And as I said earlier in your show, Mike, I think probably another month. I think by the time that the SDR takes place and people, the markets, I should say, understand how much dollar damage is done or not, we'll have to wait and see, with the yuan being more accepted not only by the SDR but in final settlement rather than having it go to the dollar directly. As that settles out, I think you'll see more and more consolidation into the precious metals and more push for them to go to the upside. So it's a situation that most of the large funds, money managers, pensions even, that missed the 2008 bottom in the precious metals during the currency crisis have woken up early this time and have moved into the paper paradigm of the gold and silver markets, which means that the open interest, as I said earlier on your show, is very, very high relative to what it's been historically, and these are strong hands. So you've got big money that got in relatively early in both gold and silver because they understand that the stock market's too high and they want to be hedged. They have no real philosophical reason to own gold like we just outlined in the last question, but they manage money and they need exposure. And the best way for them to get exposure is to buy it on a leverage basis on the paper markets. And so that's what's taken place. So again, there's that really strong bull-bear back and forth. And so just to close out, I really don't see these metals coming down a whole lot more for a whole lot longer. And I think this year is going to be one that people look back on and say, geez, I'm sure glad I bought my metal or bought my mining shares during 2016.
And that was David Morgan and Mike Gleason at moneymetals.com. Live prices at moneymetals.com show gold currently trading at $1,339 per ounce on the global market, silver at $19.87.